Welcome everybody. Today is March the 9th, 2020. Here to give you all the news according to the charts and talk about a lot of the stock market plunge that is currently ongoing in the stock market today. The Dow was down by more than 2,000 points today. The S&P 500 halted trading for 15 minutes after it fell 7% early out in today's trading. So a lot of people are questioning whether or not the market is in a recession or depression, and with the major crash that is ongoing currently in the oil markets, along with the coronavirus, many people are questioning where is the bottom. So we're going to update you all today on those three indexes, the Nasdaq, the S&P 500, as well as the Dow, and give you all the update on our last video that we did for those three stocks, those three indexes. And we'll give you a gauge to determine whether or not where the bottom can be in relation to this uncharted territory that we are getting in the global economic economy. Now, before I get started in that, I always want to remind you that we do have a website and we will be live streaming on the weekends. And in order for you to participate and comment on our live stream, you need to come to our website, which is right here, HueFinancial.com. Log in there to create a login ID, and then once we go live on the weekend, you'll come here and click on this live button and you'll be able to comment on our live stream while we are live streaming. So we definitely like for you all to come and participate in that, to make sure we all converse and dialogue on the current economic situation that is going on in the stock market and across the world in relation to whether or not cryptocurrencies or even stocks, where are they headed. So make sure you follow us there, join us. So now, first things first, we're going to go ahead and look at the Nasdaq real quick. And you can tell that we did our video here on the Nasdaq right here towards the 28th of February. And we expected the market to see higher price. It was just an initial bottom that we expected the market to find at that particular date on the 20th of February. And it did find a bottom. I mean, initially it was held as support, and the market did rally about 3% out the Nasdaq. So it's not a surprise to really see this play out the way that we expected it. So let's just go ahead and get rid of that. And I'm going to switch it over to the weekly time frame first in the Nasdaq. And you all can tell still that the trend was broken in the Nasdaq. So currently we're under the premise that the Nasdaq is not a buy right now. The market needs to find a rescuer to come and hold support. We need to get better resolution as to the coronavirus, or even the price war that is going on with crude oil. And until those things become resolved, expect massive volatility to occur in these three indexes. Okay, so currently, the last 2 weeks in the market for the Nasdaq still continues to show us that the market is weak. I'm not seeing any hints of price structure coming in to find the bottom. We're coming right here in the market in the Nasdaq that is revealing itself as trying to be held as support, which is around 8,000 points. So we could try to hold the market there in the Nasdaq to try to hold some support. Some regulatory assistance in the market is looking to be coming down the pipeline. Whatever the United States government's tried to instill some safety nets to ease the fears of many of the market participants, they're trying to do that right now. So I am suspecting that the market in the Nasdaq, the Dow, and the S&P 500 to find some support relatively soon. And it's very good to see us currently on the weekly price bars closing above 8,000 points. Now, I'm not saying that that's the end, because the last 2 weeks definitely indicates that the weakness is still present. Okay. Take a look at the Nasdaq on the monthly time frame. I don't like what's going on currently for the month of March. Granted, we are about midpoint throughout the month of March, so definitely a lot can change over the next couple of weeks for the month of March. But as it stands right now, definitely I'm not feeling positives in terms of price structure, in terms of strength. Okay, so I still suspect here that the market in the Nasdaq got some weakness to contend with. you will have to play this market on a daily to hourly time frame to really gauge what is going on. So looking here on the 4-hour chart in the Nasdaq, definitely seeing some hints that the market participants are trying to step in, given the fact that the market halted trading in the S&P 500 today. The participants are trying to throw on a facade into stating that the market is not that bad. That's what's going on today in the space. So when you get that much uncertainty in the market, we don't place no forecast. So we're not going to put in a forecast in the Nasdaq right now. We're not going to put a forecast for the S&P 500. We're not even going to put a forecast in for the Dow. This is the opportunity for us to stand the sideline and let them work out the situation. And then once it gets resolved, then you'll know, you have a better idea as to the direction in which the market's trying to go. So granted, currently volatility is present. Currently weakness is dominating the market. So given that structure, long term, we're looking for the weakness to continue. But I'm eyeing the market on a daily basis to see whether or not the government, the financial regulators, if they'll be able to suppress many of the fears that's ongoing in the financial markets today. Because if so, then the market would have found the bottom, and you'll be able to tell that once that occurs. So until that time, this market definitely needs to be placed on the sideline. So now we're going to go ahead and move on and take a look at the S&P 500. So here we are looking at the daily time frame in the S&P 500. We played a small movement to the upside too. In our last video on the 28th of February, we saw the strength really coming in the market on that particular day, and it shot higher. So 2.47% was taken out the market there. And like I stated in the in the Nasdaq, the S&P 500 is giving us the same type of idea. Uncertainty, volatility, and a lot of price action. Now, one of the things I would like to have seen the market in the S&P 500 do is hold 2950, right, for support. And given the market action today, it doesn't seem feasible. The next area for the culmination of the completion of this weekly price bar that we're currently performing now on, we need to close above 2,900 points. So as we trade out throughout the rest of this week and the S&P 500 fails to close above 2,900 points, I'm definitely still expecting more or less consolidational trading and movement lower to the downside. But unlike in the Nasdaq's case, the S&P 500 is still literally trending in an upward fashion. So we can still see the market come all the way down to 2,600 points and still see movement higher in the very long term. So this one, the S&P 500 doesn't look as bad in terms of the Nasdaq breaking that ascending line to the upside. So again, the next area of support, which we already came and touched today, was at 2,700 points. 2,600 is the next level for the volatility to try to touch in the long term. So again, sidelining the forecast in the S&P 500, would like to have seen the market close above 2,900 points. If we do at the conclusion of this weekly price bar, then that tells me that the strength has entered the market and the market participants are a lot calmer in terms of what's going to happen in the future. Okay, so right now, sidelining the market in the S&P 500, 2,900 points is resistance. Ultimately, 2,600 points are going to try to be held as support. We already came and barely touched 2,700 points today. Okay, so weakness, S&P 500. If we continue to ride with uncertainty for the next couple of weeks, even to months, the likelihood of S&P 500 breaking this ascending line is increasing dramatically. Okay. All right, so now let's go ahead and take a look at the last one, which is the Dow. And going to the daily time frame of the Dow, you all can still see here that we expected the market to do an initial support area on the 28th of February, got that out 2.77%. profit in the market. So those 3 indexes that we did our video on the 28th came out profitable. So let's get rid of that. And let's take a look here on the weekly time frame in the Dow. So here we are in the Dow. Very firm area of support is coming around 24,000 points. 23 is literally the next level of support to see in the market. Okay, we got a lot of congestion in all 3 of these indexes, so you can't expect the market to consolidate and bounce in between 26,000 points all the way down to 24, even 23,000. Okay, so I'm literally looking for the market to try to find a balance between the buyers and the sellers. That's what's going on, and I suspect that to go on over the next couple of weeks to probably even months. Okay, so given that case, with the S&P 500 and the Nasdaq alongside with the Dow, I'm expecting these indexes to continue to show a lot of volatility and movement to the downside. Now in the Dow's case, 25,000 points needs to be closed on this current weekly price bar. We need to close above that this week, because if we do, then that gives everyone a better idea that the market is finding some ease and some calmness in terms of what to expect throughout 2020. If we are not able to close above 25,000 points and we close below it, then understand that there's a lot more uncertainty, that the market participants don't have no direction, and the market is still foggy in terms of what is going to happen in the future. Expecting the Dow to continue to see those lower prices. So given that the last 2 weeks in the Dow bounced off 25,000 points and now we're closing below it, that is also another clue that there's a lot more volatility to come through, a lot more pain that the stock market will have to endure prior to us seeing a resumption to higher price. Now, zooming out, you can still see how the Dow has some room to continue to see lower price, but the trend will not be broken of the long term of it moving higher. So out of those 3 indexes, the Nasdaq is the only index that is breaking that trend. The technology sector is the one that's taken the massive hit in this current economic situation that it is going through. The Dow and the S&P 500 got some movement to where we can continue to see lower price. Minor support area, 24,000. Like I said, 23,000 will be next, and then 22,000 points will be the ultimate area that the Dow cannot break below in order for us to maintain the major ascending trend that it is going through. 22,000 points. Keep your eyes open on that, because if we hit that 22,000 point on weakness, we're in a depression. The market is massively hitting some budgetary restraints, unable to find liquidity. Corporate defaults will increase. Bankruptcies will happen once we hit that particular level. Okay, so that definitely cannot occur in the Dow. So I'm definitely keeping my eyes open on that right now too. So currently, yes, I'm not going to put a forecast on any of these 3 indexes, but overall, I'm still seeing weakness until we see the market on those 3 indexes break above those resistance areas that I pointed out. We will continue to see consolidation of trading and movement lower. Okay, so again, questions, comments, let us know. Make sure you follow us on Twitter, Instagram, as well as on Facebook, and then join us on our own website, HueFinancial.com, to make sure you stay updated on the information that we are providing that you're not going to get from the mainstream media. I'm done.